Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. Today again we will take a look at the euro currency, mostly because markets after the significant rally has turned to some relief and taken the pause, and another reason is because the patterns that we would like to see on some currencies, some of them already has been completed, as the Brent bodies we trade on the Canadian dollar. Others hasn't been formed. For example, as you remember, on the New Zealand dollar we also have expected for some kind of the Brent body, but my market has continued to move higher, and right now it's a bit early to speak on the patterns because markets just recently has stopped in the upward direction. On the Canadian, as the crude oil again has turned to the upward direction, as you can see, the Canadian also has completed move down and hasn't formed the head and shoulders patterns that we have discussed. So we need some other patterns to be formed to turn to some other currencies to talk about. Today we will take a look at the euro currency because here market has completed the action that we have discussed yesterday. So as upward action has erased this bearish ABCD pattern and market has broken up this flag, and it's not really a typical breakout. It's better to say not quite the typical, but this potentially was the bearish pattern, but market has shown opposite breakout. That's why currently market is passing the test on let's call it on the truth breakout, on acceptability of this breakout, if it could call it in this manner, because right now market is testing the upper border of this flag, and we said that this will be the moment of truth. So if market will hold above this area and will not return back down inside of this flag, it probably will let market to continue to move higher. If market will fail here and turn down, well, in this case it's very difficult. Will be rely on this upward action, and it probably will lead market to the lower, to the downside, because in this case this will look like the bearish trap. So Jack Schwager, classical technical book, he said there that it's market forming the breakout of the flag in the opposite direction and then return it back down. It calls this like the trap. In this case will be the bullish trap, and after that market usually continue to move lower. That's why here market stands at a very important moment. If our suggestion on the possible upward action will be correct, in this case we could expect the reaching of the 118 area. This relatively is confirming by the pattern that we have on the dollar index. It's double repo sell. That's right now stands in progress. So on the 4-hour time frame chart, as you can see, market has dropped really fast on the inflation data that we've got yesterday on the United States economy. So you can see this drop really significant, and market almost has reached the area that we have specified as the indicator of the market's bullishness. So this is the confidence support on the 4-hour time frame chart, trend line support of the upper border of this flag pattern that we have discussed. And if market will hold there, as we said, it's probably we could expect a further action. The next target probably will be, guys, 1618 extension of the same ABCD pattern. The butterfly on the daily chart is a bit extended target, but we also could get the smaller pattern of a smaller target on the 4-hour time frame chart. This will be the 1618 of this ABC bottom D pattern. So right now market turns into retracement. So following this logic, we probably should watch for some bullish patterns here on the hourly chart, somewhere around this support, so 1345 area, somewhere in this area. Maybe market will form here some kind of the butterfly, so upward bullish reversal pattern. Well, in this case probably could try to take the long position, but as soon as market will start the upward direction, you need to contract your stops as soon as possible. tight your stop as soon as possible if market will form bullish pattern and will turn to the upside action. And if you would like to take the position, do not place stop too far here. You could place it maybe even below the confluence or at least below the 50%. Not too far, because if market will break this down, it's already will become the warning sign, since what else could stop market if market will pass through the confluence support and the trend line? Hardly the single fib level will hold market from the action. Besides, placing the first stop, for example, here, and where market will start to bounce up from the confluence support, you could tight your stop to either break even or place it slightly below the confluence, because if market will return right back down to the confluence should hold this action. If it will not be done in this case, if market will pass through the confluence, it doesn't make sense to place stop here, because breaking the confluence will mean probably the breaking other levels. That's the simple logic of that is based on the strength of the different levels. So here, guys, we could watch, as I said, for some reversal patterns. The one thing that I do not like really, guys, on the daily chart is the forming of this bullish engulfing. Oh, sorry, bearish engulfing pattern. It's the target of this pattern suggests the drop and length that equals to the length of the bars, the downward action. So it's approximately should reach 618 support at least, or it should fail this pattern. So what's existing of this engulfing pattern is really the significant minus of the current situation and is taking the long position. Well, other solution that you could take here, do not try to make any wizardry around this area and just wait when the market will turn to the upside, will take it out of this top, and after that take some long position on the retracement. That's also is possible. It will be safer way to act, because you will join already to the upward action that will restart. If this upward action will not start, you will save your money and just you will do nothing and wait what will happen next, because the market, as I said, will break through these areas, return back inside of the flag. That will be the bearish sign. So that's, as you can see, the infinite question between the safety and between the efficiency, where what it's better to choose. So you could take the efficiency and take the better entry price, but you will take the more risk when you're trying to be involved in this action around this support, trying to get position, or you will get the safety when market will reestablish move up, but you will get the worse entry point. So this is you can see the question that we every time meet on the markets. And finally, guys, I would like to show you the setup on the Great British Pound, this tactical setup. So here we are done with the euro currency. We could say nothing more here. On the Great British Pound, mostly on the hourly chart, you could watch for double repo pattern, guys, based on this thrust up. If we'll take a look at the forward time frame chart, you will see that is two candles double repo pattern, 1, 2, 3, 4, 5, 6, 7, 8, 9 bars to the upside, close below, 3 by 3, close above, creating the new top and close below. This pattern has been completed. So it's scalp, it's very short-term pattern, so not suitable for everybody. If you would like to trade it, you will have to trade it with all consequences. What does it mean? It means that if market will form the double repo failure by the action above it, you will have to reverse your position to compensate your loss if you will take in the position in the direct double repo. The market will start move down. That's why it's a bit dangerous and carries a lot of risk, but this is also for those of you who would like to. This is short-term trade and will demand the total your attention within this trade will last. So, for example, if you are taking the short here, a market will not move down with this double repo and turn up. You will have to reverse your position, because this will be another directional pattern that will call the double repo failure. So you can see this is a bit very active trading. It's not suitable for everybody, but that is just a pattern that I have found here on the Great British Pound. If you will be interested with it, so you could try it. But mostly, guys, today probably will be the day of the expectation, because the gold market also has turned to retracement, other market stands flat. So probably today will be some kind of the relief session.